TGIF Warriors. Alexander, Michael Weissman, how are you? Hi, Sinatra, AJ, Michael Bergman. All you guys getting ready for the Memorial Day weekend. Team, probably need a 3-day or two, right?
Yeah.
Huh? You do too?
Yep. We get one. Everyone's got
All
a bank holiday.
All right, so finally a little bounce in cable. 23 level, it took, took out this support, and now we're back above it. We're pretty overdue for some type of retrace in Euro cable, Aussie, or is this or was this a spot for, big turn in the dollar? What do you think, Ryan?
We've got a bounce. Some of the levels have held. Euro dollar held into that 107, but it's got to get back above 107.60. Aussie held 64.80, 90. It's got to get above this 45.50 area.
Okay.
So until we see that happening, the trend remains your friend. So these are the key numbers. If we get above those areas, then we're off and running. We had the crack of 140 up at the big barrier there. But that's come back again, and it's got all the hard work to do again.
Okay. All right.
It remains to be seen whether this is a pullback or just a little pause for breath.
Yeah, you mean something like this, and then we go again. Something like this, because all the breaks have been very shallow.
Yeah.
And we're way above where it turned good at 102. So I don't know. Why not, I'll pull back, under 103, shake the dollar bulls up a little bit. S&Ps, do we have a deal?
I think we're there. On 90-10, we've got a deal, and there's a high chance it's a 2-year or kick through 2024, which will be at the more positive end of the deal rather than something short term. So the headlines that have been coming out suggest we've got a deal on the table. I think market will move on the confirmation, and then we'll see what we do from there.
I'm shocked. Shock horror. There's a deal.
Just because they have a deal in principle doesn't mean they'll get it through Congress. Okay, there a lot, they still have to go through the legislative process. Both sides feel like they're being ripped off.
DOA, baby.
Do you think so, Blake?
Well, let me ask you this. If there is a deal and one of the two parties doesn't endorse it and it doesn't go through, do they want to be the ones that made the US default? That's the question they want going to ask themselves. And I'm betting because of political costs, they will not.
I think a lot of the polls here, the majority of Americans want it to pass, but there is a small minority that says, let it happen, and both sides feel like, they've given up too much. So, with this, divided, polarized Congress, no one thought January 6th would happen either.
Yeah, that's always been the risk, right, Dale? I mean, the risk is you got two parties that are really freaking are polarizing. They hate each other. So
I mean, before they stormed the Capitol, did anyone think that would happen?
Yeah, but that was driven by people, not Congress people.
No, it was driven by a president.
Well, people did it. It wasn't Trump who went in there. So if we left the debt ceiling to be resolved by people and not Congress, we would get nowhere. But I just fear that politicians, at the end of the day, they do the same thing they know how to always do, and they're going to compromise.
Try and get reelected.
Yeah,
whatever
exactly.
reelects them. Yeah.
Exactly.
Okay. Getting a nice bounce while I have you here still, especially in silver. Came out of nowhere, I mean, although we did have some nice divergence down here. Could we rally to 24.50? I mean, that's kind of like the key, similar to like in the euro, 109 is the key. So is there that much? Could we have, that kind of pullback in the dollar? Maybe even like gold could rally back to 2000?
Perhaps. I mean, it's been 2 weeks of hell for metal, especially for silver. So there's going to be at some point a bounce, but I'm not convinced yet. 24.50, roughly there, is the point of interest. So you've nailed that. Until we get there and break above and close above, it's still not looking too bullish. So can we rally up there? Well, a lot of things have to happen. I think the debt ceiling has to be raised, through 2024, and risk has to rally. I think eventually it's going to get broken, absolutely. But in the short term, I'm not sure yet. Not sure.
Okay. Here's NASDAQ, all right, on multiple time frames. 15-minute non-confirmation. And we all know how strong this has been, right? 15-minute non-confirmation. Let's go 2 hour. 2 hour, still diverging. 4 hour, really diverging. Daily, first divergence. And, this is the way I drew it up here. So, it's a throwover, and we actually tested the throwover level yesterday on the sell-off, I believe. No, it was the day before. It was Wednesday. And that's a picture. So we'll see. I mean, throwovers could just, continue, but at least now where if NASDAQ ever does anything wrong, where your go-to signal is getting back inside the formation. So I just wanted to show that. NASDAQ made a new high. Apple hasn't. Just a couple of things that I think are worth thinking about. If we're going to get this dollar correction, this should be the time that, the S&Ps make some hay out of it. So we'll see. It's not a 2-week reversal. Day's not over, but you needed 41.20. Right now, it doesn't look like that's going to happen. And even copper is bouncing here. And it's been a pretty good sell-off. I don't know, maybe it was a buying opportunity here. I don't know. It's an IDK for me. And then finally, yields are coming off on the 10-year. 3.5 bips. Okay, still had a good week. Still, in breakout territory. And TLT, we'll see, should be, it's not that much higher. I just can't ignore this chart. Even though it's not accelerating, it still looks like a breakdown to me. Nothing this week changed it. I know a lot of people are bullish because of net positioning in the bond market, but we'll see. I mean, you would think that maybe the bonds, rather than the S&Ps, would be a beneficiary of a deal, wouldn't you think?
Good question.
I mean, isn't that what the debt ceiling's about? It's not about NVIDIA, right?
Yeah,
it's about this paper.
Well, having said that, it's really the very short-term paper that's being under some distress. 10-year, 20-year, it's not driven by that much. So I think as an immediate reaction, stocks are probably going to move more than bonds on the debt ceiling news whenever they come. But It's a tricky one. 10-year, 20-year, 30-year, as I've said so many times, driven by flow. And it's a tricky one. 10-year US, I think 390 is a huge level, absolutely massive.
It is.
And for that to break,
that's a trend line. That's a trend line.
Yes, and for that to break,
right here,
exactly that. And for that to break and stay above and trade considerably higher, go towards 4.5%. a lot of things have to happen, and I think inflation has to be really sticky, which I don't think it will be. I think it's going to keep drifting lower. I'm not saying it's going to go back to 2% anytime soon, but I think it's going to be drifting lower. And when the Fed also tells us that they are going to change their the target from 2%, which I think eventually they will, then that puts even less pressure on bonds, and they can, they will find support. But anyway, one step at a time. 390 is huge level.
Okay. So Blake, you want to come in here and tell us what your thoughts are going into the long weekend?
My thoughts are
listen.
Listen, folks. Steve, are you here? Come on, Steve.
He's here.
Laugh
here
with us, buddy.
He's listening.
Steve.
I'm here. He's here.
Okay.
What's with your
voice?
Waiting
for man? The listen. Anyway, the dollar, I think, is going to be. This is a tough one. It's a tough one going into the end of the week. We got PCE data coming out. Really, really important data for the Fed. You look at the dollar and you think a couple of different things. Well, first of all, I'm thinking is volatility first and foremost, because let's say we get an agreement in principle, which that's what I'm expecting this weekend. I'm expecting an agreement in principle, and like you pointed out rightly, Dale, we still have to pass all this through Congress. So we get an agreement in principle. McCarthy says he's going to give 3 days to his people to review the deal. I mean, 1, 2, 3. Okay, let's just imagine deal over the weekend on tomorrow or today. They got till Tuesday to review it. Then you've got then it's got to pass the House and then the Senate, and we're going to be going right into the X date within the 31st and 1st. So it's going to be a tight agreement. And the thing about, like, you look at the dollar and you look where the dollar's at. Obviously, we're in this ascending channel. We're approaching some support here, but does the dollar initially get a bounce on an agreed in principle deal? I think so, but at the same time, you have PCE data coming out. So when you look at the PCE data, all the disinflationary data that we've seen as of recently, I think most people would expect. I expect that the data is going to come in below 1 or 4.6% year-over-year expectations. That would be in line with last month, but that's what the market is actually assuming. The data is going to come in a little light. So weak data, dollar index drops down to let me just draw this out for you, drops down to channel support, agreement, dollar bounces a little bit, agreement in principle, yay, dollar rallies into the end of the day, and then going into next week, the market's going to be looking at the 618. They're going to be looking at the deal. They're going to start to make assumptions that there's people in the Senate that are not happy with the deal in principle, and maybe the dollar comes back under pressure again going into early next week. So that's kind of how I'm mapping it out in my head. That doesn't necessarily mean that's what's going to happen. That's just, when I, as a participant in the market for as long as I've been, I always try to think about what's happening and what's going to be happening in the future. Doesn't mean that I'm going to be right, but that's how I tailor my trading. And so with that being said, one of the reasons why I got long the dollar yesterday, long the euro yesterday. If you guys are not ForexAnalytix subscribers, you can see, picked up the euro yesterday. The reason why is because A, we're at a 618 retracement, but B, because this is the battle plan that I have in my head of what I think is going to happen over the course of the next couple of days. And the dollar is starting to weaken ahead of the PCE data. So let's see how the market reacts here. I look around and there's a lot of key levels being respected in the FX market. You know, you got the euro at the longer term, you know, you could say daily 618 retracement. You got the cable pivoted off of channel support. You know, everybody knew that last night that we were on channel support, just held it really nicely. Aussie dollar 127% extension. You could argue that we're near a false breakdown. And you know, we start bouncing back above 65.50 and you might really get a squeeze. Kiwi did a false breakdown below 2022 lows over here. The dollar Canadian went right into the resistance zone that we've been noting. Dollar Swiss stalled right at the key, you know, 90.60 level, and it's failing. The dollar yen is the outlier that continues to hold. And like Ryan said a little bit earlier, we've got a lot of hard work to be done here at the 140 level, but the 140 level was also the 127% extension of this massive move lower post, you know, Ueda, his announcement, you know, his non-committal last BOJ meeting, you know, over this move. So, you know, and we're at 161% extension of that move as well. So, you know, the dollar's at a pretty key inflection point here, and like I said, all I see right now is a lot of volatility. This is not the time where you establish a position and you're like, hell, I'm going to get I'm going to get short the dollar, I'm going to stay short the dollar for the next you know 6 months. I don't think this is the place. I think there can be a lot of volatility around these levels. So you know, if you get a nice swing trade in and you see some profits, maybe you want to pull it off, whether you're on the long or short side. So that's kind of how I see the dollar at the moment. And it's tricky. And it's going to be interesting to hear Mark Chandler's views on the dollar, because he sent me a private message yesterday. I shared his message with the ForexAnalytix community inside of our chat room. If you guys, you know, want to see what our chat rooms are like, and, you know, all the conversations that go on in here, whether you're talking the Flowonomics room, which is the macro chat room, you know, the S&P room where everybody's talking about the SPOOs and what's happening in, you know, all the markets outside of the FX market, and, you know, where we place our trades. We talk about where we're, you know, what's happening there. But in the general chat room, I shared Mark's ideas. So it's going to be interesting to hear if his ideas have been updated since a couple of days ago. And we'll find out in just a few minutes. So with that being said, Dale, that was a long-winded answer of how I feel about where the dollar's at, but there it is.
Okay.
Yeah. So what do you think there, Dale? What do you think is going to happen with the debt ceiling right now?
I think that McCarthy, it took him so many votes just to become speaker. I don't think he's a real strong speaker. He's got a very it was tough to put a coalition together. I think he's going to have a tough time delivering.
I think people don't trust him, which, you know, yeah. I mean, you know, based on, you know, well, anyway, I'm not going to get into politics, but anyway, I think he has a hard time garnering support. I mean, as you're pointing out, you know, he has a hard time getting support, but he's not. I don't think he's trusted by. Both sides are very polarizing. So anyway, but
I think, you know, I think the whole process, we will have a deal, but not before we have, I think, some damage done.
The market's going to have to put a little bit of pressure on these politicians. Yeah. Like the market's going to have
the TARP. Remember TARP?
TARP. Yes, exactly.
Yeah, the market they didn't pass it the first time. The market sold off dramatically. They got together in a room and did it. That's a great point. It always takes a constituents calling their senators and congressmen and saying, "Hey, I'm losing my retirement account here. You know, get something done. It's costing me money."
Market's going to have to put the boot on the back of the neck of these politicians.
Yeah, that's what I think is going to happen, no matter how they, you know, color it.
Don't forget, guys and gals, Dale's been around since before the beginning of time. 1776. Dale was here trading. He's seen it all. So I mean, no, but Dale, those are very wise words, because, and this is the time that you want to be involved with, you know, ForexAnalytix, our team, the experience that we have here, not just you, but Stelios's experiences in on deal desks in London, and same with K-Man's not here, and he's on vacation right now in Belgium, I think. Ryan's experiences on the trading floors, and Steve's macro economics. You do have to listen to him when he talks. This is the experience that really is going to help
stuff.
What's that
stuff? You get Grega's stuff.
Oh, Grega's Elliott wave counts. I mean, this
Andre's
is where
harmonics.
This is where you have to take it all in, guys. And speaking from experience, Dale, I think it's important that you pointed that out. And I like I said, I mean, I agree with you. I think the market hasn't seen the volatility yet, and I think the volatility is coming. Yeah. And it's going to be it's going to be a little bit of pressure before these politicians. If you guys think we're just going to breeze through this weekend and that's it, and next week, I think you better buckle your seatbelts. All right, Dale, how do you feel about the S&P here? I mean, because this recovery has been, you notice we're in the middle of this channel. I mean, we're literally, we can't break above 4,200 on a sustained basis. We haven't pulled back, but we're just in this, ascending channel. What do you think?
Guys, I still think we're going to make that run to 43.30, something like that. But I can't project into the future on this. I have to say the most important event this week was the failure for there to be a breakout over 4,200.
Right here. Yeah.
So I mean, so my bias is that the highs are in, and you sell these retracements. Jay's thinks 4,400. We'll see. It's really going to have time to make hay if we get that pullback in the dollar. So we'll see if that helps it make a new high. But I think that was important that it failed from up there. So I'm wrong over this week's highs, looking for a retracement to sell. I'm just waiting for next week. I'm not going to do anything today.
Gordon chimes in, and he wants a not NFP competition, but he wants a debt ceiling raise competition. I think he just wants a free month of ForexAnalytix, as I think is what he wants. Which, by the way, Ryan is so good at hosting our NFP competitions, which you'll have one next week where we give away 3 months of ForexAnalytix so you can be in our community. So Ryan, what do you think is going to happen here today? I mean today, this weekend. By the way, we do have a long weekend. We will not be broadcasting on Monday. It is Memorial Day weekend here. But I've already promised this to people. Just follow us on Twitter. I might have an impromptu. I'm not going to hold our rest of the team's feet to the fire here, but I'm going to, I'll have an impromptu session, and we'll go live. If the market is wildly moving, I will, sit down, and it might be around the FaceTime around these times on Monday, but we have a long weekend. How are you preparing for this weekend? And what do you think there, Ryan?
Yeah, I think we got to be careful this weekend. You think that some boots need to go for next week. I think there's a chance we get a deal announcement tonight before they all clear out. Yep. And if not, I think there's going to be a big weekend risk if they pull a deal out over the weekend, because, as you say, we've got that long weekend. Really, a lot of markets are shut on Monday, so it could be a bit gappy if the market wants to move on it. So I think we might see a bit of position closing today. Yeah. We've got a potentially big end of month fixed value date for the corps today because of that bank holiday again. So London time 4 p.m. could be a bit spicy. But yeah, I think traders have got to be careful of potential gaps if we get a deal over the weekend.
That's a great heads up, Ryan, with the value date. And that will be obviously in the ForexAnalytix chat room. We'll be talking about a lot of fixing flows there, which that's kind of, those are the kind of things that we discuss in the community. So great heads up there. And yeah, you got to watch the gaps this weekend. If you guys have exposure, limit it. Don't, I'm trading fractional sizes right now, half quarter size positions, because I just don't want to lay myself out there in case there is a headline and it moves against me. Then that can definitely happen. And if you're greatly exposed, you got to be careful. Steve, what are your thoughts with politicians here? You love them all, and as much as you love Bitcoin, how do you feel about what do you feel about the about what's happening over the weekend and what the risks are there?
First of all, I'm going to keep it short.
Oh, you're not going to say, listen, damn it. Go ahead.
Because as you can hear, I don't have much of a voice. Yeah, woke up and
Jason brought it home again.
There is a likelihood that that's the case indeed. One thing is for sure, I don't think it's a very smart idea keeping a lot of risk on the table. As you said, we might get a lot of volatility. Nothing is certain yet. I do think, this is a personal opinion, doesn't mean I'm right, but I do think that today's counter reaction to what we've seen the previous days of the week is a reaction that shows a little bit more optimism, because at least, as I said again yesterday, I do believe that resolution of the issue is going to be dollar negative, in my opinion. But that doesn't mean that it's a slam dunk case, because the issue seems to be moving in the right direction, that it's going to be over and done. So personally, unless you really can't help it, I would remain very, very cautious here, right? I don't want to make assumptions, and I don't want to make or take trades based on, you know, whatever development in a political discussion. I think it's a very bad idea.
All right, Steve. Thanks for your comments, and I agree with you on positioning. Hey, Stel, we're about 2 minutes away, 2.5 minutes away from data. How are you reading this weekend? What do you think about the PCE data that's coming out?
I think that inflation in all of its forms is going to keep grinding lower. We're getting high inflation months get taken out of the calculation, low inflation months being put in. Oh, of course, you know, if things get worse in terms of, I mean, this is all else unchanged, okay, but you know, there's always a possibility that inflation might go up, but theory and you know, logic and maths say that it should be grinding lower. So I think that the probability remains that we get slightly lower than expected prints going forward.
Don't forget, guys, that we're also expecting durable goods orders.
Yes,
right,
yes.
and we expect them to worsen, actually. So keep that in mind.
Yeah. I mean, you know, the economy is slowing. We're seeing disinflationary pressures, but are we actually going to get deflationary pressures where you start to see inflation go in reverse, which doesn't happen that often, right? You're not going to, I think that's going to be the sticker shock to most consumers is, you know, you're going to hear all these, inflation's coming down, and people are like, my prices aren't coming down, because consumers, the average consumer, doesn't understand that when prices go up, they don't come down again. You know, it's like if you think your prices of eggs or milk or gas or whatever, your housing is going to come down. No, everything got ratcheted up, but the chance of it coming down from here is very difficult. So
I think it could happen, and if it does happen, the whole world's going to be going, oh my god, deflation, exactly the same way as people are panicking now about changing money supply. It's negative for the first time since 1940 something. Well, look at the chart. It's always been rising, and we have a little blip going lower now, and everybody's saying, oh my god, it's incredible. Well, you should have negative inflation at some point. You should have negative, in theory, negative money supply, but you don't. What does that tell you? I mean, this is everything. All these charts are going just to infinity and beyond. You know, it's amazing. But anyway, let's see what numbers we get.
Yeah, just in a few minutes. Ryan, you got any feeling about the PCE here?
No, I think we might get a similar reaction to yesterday with the jobless and GDP data. So just look, if it comes in hot, we're going to jump on Fed expectations and do the opposite if it comes in soft.
All right, here it comes, guys. Yields on the right, jokers on the left, and
durable goods month on month is good. Actually, core is worse than expected. The non-core is higher than expected. Interesting.
Dollar's firming up a little bit. You got the
We
euro.
still don't have
trying
the
to
PCE
bounce.
data. Let me see.
No, we don't have it.
S&P's non-event.
Trade balance worse than expected by only 14 billion.
You guys see the PCE data? Ryan,
No.
you see it coming out anywhere?
No, they're not out yet for some reason.
Sometimes you got to look at a few different data sources. This is the data flash that comes with
Here we
Forex
go.
Analytics.
There they go.
4.7 core. Hot PCE.
Okay.
4.4. Hot.
Oh,
Look at the good trade balance, by the way.
Now they're going to be talking about the Fed raising rates in June.
The
oh
good
yeah.
trade
I
balance.
think that's a slam dunk already.
Almost.
Well, I mean, it was
100
0% a few weeks ago, Blake, and now it's 50%.
It was a near guaranteed earlier this week, and we're pretty much can guarantee it now. So.
Almost 100 billion of a good trade balance, by the way.
Trade deficit, yeah. That's nothing, man.
Let's talk to someone who knows what they're talking about.
Let's do that.
You know who it is?
Mr. Chandler.
Who else makes sense out of sense? Mark Chandler does.
Like
Mark.
that.
Yeah. Hey,
yeah, I'm gonna check out, but I want to say, Mark, it's always great to hear you. And I know it's been so long since we've caught up. So glad you're here at a great time, especially considering everything that's happening. So I'm gonna leave it to you and Dale, but I just want to say good to see you, my friend.
And I want to, yeah, Mark, welcome. I just want to thank the team for another stellar week. Some nice pips called on Kiwi and S&Ps, and then yesterday for this little pop we're getting in euro, and all the hard work that you guys put into to build people up so they have a shot at not only surviving but prospering. So great job, team.
Thanks, Coach.
And Mark, how are you?
Surviving. That's the best we could do, huh?
Huh?
Surviving.
Okay. Well, first you have to learn to do that before you make progress. Most people don't, right? In this business.
Yeah. What an interesting time, huh?
Yeah. And, Blake told me you sent some notes over to ForexAnalytix about midweek, and you wanted to come back Friday. So I know that there are things on your mind that you want to talk about during this time period. So I'm going to let you take the lead. What's top of mind for you, Mark?
Well, I'd say, of course, what we all like wrestling with is this is the debt ceiling, and I want to say that. So what? I mean, okay. I know that just now for the last half hour, you guys have been talking a lot about it, and that's what's been in the headlines and everything. But people like us with gray hair or no hair, we've been through this so many times. The U.S. would default. It's possible, but it has to be a small tail risk. While the base case is that what we've seen happen time and time again is for some last-minute deal. I think that we should be thinking about first the big incentives. How the incentive structure is. I think both sides have it in their interest to convince their constituents that they're getting the best deal possible. And how do you do that? You wait till the last minute. Secondly, I think that neither side can be sure that they won't be blamed if the U.S. does default. Right. And be blamed means being punished at the polls next year's election.
Right.
And the third thing I'd say about the debt ceiling is that neither side is going to give up the power, is going to be using the 14th Amendment or getting rid of it completely, because both sides have been able to extract concessions from their adversary, from the other side, by using the debt ceiling as a negotiating lever. And I know it doesn't make America look good, but I want to say that every country has its own idiosyncratic things, like the British royalty or the Emperor of Japan or coalition governments, things that our presidential system in the U.S. doesn't really allow for. But so I want to say that, we've got a peculiar institution, the debt ceiling. And I think that we should, this is part of the American, like the body politic. This is the way we do things. It doesn't look very pretty. And I think it was like Bismarck that once said that in a democracy, you shouldn't see the way laws or sausages are made. And we're seeing the way laws are made. And of course, it doesn't set right with most of us. We don't like this. It looks bad. But at the end of the day, I think that we can be rest assured that the U.S. most likely will not default. and that this will go up to the last minute. Concessions will be made. And I think that for market participants, we have to think about not what happens if the U.S. defaults, because if the U.S. defaults, we got bigger problems. But more likely, the U.S. doesn't default, and then what happens? I'm thinking that if the U.S. doesn't default, we're going to have a flood of T-bill issuance.
Yes.
Because the government's been reducing the T-bill issuance to keep them below the ceiling. So we get a flood of T-bill issuance, and the Treasury's got this account, like a checking account at the Federal Reserve, and that's been drained down. I think it was less than $60 billion yesterday, and that should be like $500 billion to say $700 billion. So that'll have to be rebuilt as well. And between that and the T-bill issuance, which there's an overlap, of course, then we should expect a little bit tighter financial conditions. And that's sort of the first shoe that drops. The second shoe that drops, I think, is on the fiscal side. That's on the monetary side, thinking about what the Fed's going to do with the tightening of financial conditions. Fiscal side, the cost of lifting the debt ceiling is going to be a cut in spending next year. So we should expect some fiscal drag. And I suspect that as part of the deal, that maybe that student loan moratorium, that debt servicing on student loans also ends. And that takes money away from savers, from people who are sort of prime age workers, and takes it away from savings, and also then is another drag, fiscal drag. So my sense is that the U.S. economy isn't slowing. It looks like it's going to grow something like twice the pace of Q1 in this quarter. I think the Atlanta Fed will update their data after today's flurry of data, but they were at 2.9%. The market's a little bit below that. Remember, we grew a little bit more than about, say, call it 1.3% or so in Q1. The Federal Reserve says that the speed limit, the non-inflationary growth of the economy, is only about 1.7. But I think that this is the best the U.S. economy gets this quarter, and then we slow down with this fiscal drag and with the higher interest rates. So what this means, I think, for the dollar is that we've had a big 3-week dollar rally, and I think it's over or nearly over. And that's what my note was to Blake earlier this week, that the dollar's in its last stages, partly because the interest rate adjustment is also at its last stages. And the interest rate adjustment, I think, has really driven this dollar rally for the past 3 weeks.
Okay. All right. So we talk about resolving the debt ceiling and the huge supply of new treasuries that's going to be coming on. And yet you talk also about an interest rate peak. When I look at the TLT here, Mark, this is a proxy for 20-year paper. Would you buy that? Would you buy this?
I think, yeah, this is what I'm thinking is going to happen, Dale, is that next week, we've had this some recently strong economic data, and I think that's over. I think next week we're going to get softer auto sales, softer jobs growth. And so I think that the interest rate peak, I'm thinking, is not just at the short end, like the 2-year, but also here at the longer end of the curve. I think that we've had this big adjustment of interest rates, and that's what's driven the dollar, and that interest rate adjustment is over, or just about over. And the next batch of data, again, we're not only thinking about the auto sales and jobs data next week, but then towards the middle of the month, we're going to get CPI. And I think someone was saying that on the show before, that we should be looking for lower CPI numbers with the base effect and all that. And sure enough, when we get the May CPI, it's likely to fall close to 4%. And that gives us so June then is also going to be a good month for falling inflation. And that's the good news for inflation out here in the first half, probably something close to 3.5, 3.6, something like that for next month. And then the second half of the year, much more difficult because of the base effect. But so I'm looking at some soft economic data, weaker inflation numbers, and that I think helps cap the yields at the long end of the curve.
Okay, so we've had some of those numbers. Wasn't that one of the worst U.S. manufacturing numbers last week, Mark? We've had some weak numbers. We've had good inflation. And you talk about supply. Could the bond market now not be as sensitive to economic data, and it's more about supply, and that rates could go up even if the economy is softening because there's not enough demand to meet the supply, just a pure supply demand argument being flooded with treasuries and crowding out other credit?
Well, seems to be like what I've heard this from other people as well, clients of ours, talking about the huge amount of supply coming. But when I look at the auctions, the government's auctions in the past week or so, while we've been having this debt ceiling looming, very well received. And so I think
The
that
auctions have been.
I
Yeah.
think the auctions have been, so that is to say that the new supply has been easily absorbed by the market. And this is not even, when we talk about the market, I mean not including the primary dealers, because the primary dealers get stuck with what everybody else doesn't want to buy, but everybody else has been wanting to buy the other stuff. And so, yeah, I think that the concern about too much debt crowding out, I think is a bit of an exaggeration. Partly, I'd say, because with the Federal Reserve does that survey of senior loan officers, and what they've picked up is that there's a weakening demand for credit from the private sector. And so, yeah, I'm not so sure that there's much of a crowding out. I do think that going forward, the key, I think, really is the general state of the economy and inflation. And I think that inflation, we're going to have another 2 months, this CPI later this in June, and then the printing of the June print in July. And I think that we could see yields pull back 20, 30 basis points before we get to the end of June.
Okay. Yeah, 360 on the 10-year is pretty pivotal. That's where it kind of broke out from. I wanted to ask you, with your narrative in the dollars that we're close to completion, a lot of people thought we might get back up to here, Mark, call it a flat, some type of, that's an Elliott term. Do you think that the dollar turning south and weakening is going to be a positive for things like S&Ps, or a negative, or it doesn't matter?
Yeah, so it's hard for me to think about the dollar in general. I usually see like some pairs of exchange rates more sensitive to the S&Ps than others. So, for example, the Canadian dollar, I find, has a higher correlation most of the time with the S&P 500 than it does with oil, or than it does with short-term interest rate differentials. So I don't know. I mean, I try to. I get the idea of these intermarket ties and links and things like that, but I typically don't emphasize them, except thinking that the dollar, the foreign exchange, is one dimension of the price of the dollar, and interest rates are the other sort of dimension of the price of money. And I see those two tightly linked. Stock market, different story. But what strikes me is another reason why I say that the debt ceiling is like is a big distraction is I thought that the S&Ps and the NASDAQ made new highs for the year either earlier this week or last week, while the debt ceiling debate is going on. And so I think that, so I think that
especially the NASDAQ. Look at that.
Yeah. Yeah, I think that outside of the T-bill market, the credit default swap market, which is thinly traded in the first place, I don't really think that the debt ceiling debate has really impacted the markets very much. I know everybody talks about it, but I don't really see it. I mean, I think I can explain the dollar's movement and what's going on with interest rates, especially, say, the 2-year Fed fund expectations, without really talking about the debt ceiling. I think that we get ourselves caught up. I think I got a T-shirt from the last time we went through the debt ceiling. And of course, Fitch's warning about putting the U.S. on credit watch.
They're scary. They're Moody's in this cycle, right?
I think it was
2011.
In 2011 that downgraded us. But at the end of the day, it's like, is there really much of a difference between the AAA and the AA plus or the AAA minus? I don't think so. And I think
not on my report cards I brought home.
Yeah, I think that the Treasury market is sort of like what Reagan said. It's big enough to take care of itself, and I just think that we get caught up in these, partly because we like the drama. It helps fuel the markets, but at the end of the day, this is just, like I say, a peculiar American institution, not something to be proud of, but something that we survive, and something that's not the end of the world.
Okay, so what are your price levels that you're looking for here in, say, for example, Euro's close to digging in its heels here? What new highs, 112, 113 euro for the next advance?
Let's put in a low here, some kind of low. I don't know if we've had it yet. I think we're pretty close to it. I was looking at the, when we show on this chart here, the distribution kind of top we had in the euro, and I kept on looking for lower levels. Now we got that lower level. We surpassed that 107.35, that Fibonacci retracement. Because I was thinking, sort of towards Blake's point, he says he comes up with a scenario that is like sort of his working hypothesis. And my working hypothesis had been that we are going to correct the dollar's sell-off, the euro's bounce from that would be the March 15th low, and sterling was the March 8th low. And we've surpassed the euro's retracement about 107.35. And the question, it seems to me, is this the beginning of a new leg down, or is this a false break? And right now, my leaning is to make it to see it as a false break, and that we move back up, we recoup those retracement levels, and that we have a gradual turn here in the turn back up in the euro after having corrected. I think a lot of the good news for the U.S. is known. I think that, like I said, the debt ceiling wasn't really much of a factor here, but I think for me, the interest rate adjustment's nearly done, and now we can begin focusing on, Europe's had a series of weak data. Germany actually revised down their GDP, so they contracted 2 quarters in a row.
Yeah, they're calling it a recession, is it?
Well, it's the technical. I mean, the U.S. economy contracted in the first half of last year, and very few of us really think that was a recession. What strikes me, Dale, is that the word recession has no real meaning. I think that Americans invented it to come up with a separation from the Great Depression, to distinguish business downturns after the Great Depression. So they came up with the word recession. But there's no real agreed upon meaning. And even in the U.S., the official arbiters don't use that 2 quarters of back-to-back quarters of contraction to be a recession. But what I'm thinking here is that a lot of the good news for the U.S. is known. Like I say, we should be getting some weaker economic news. At the same time, I think that a lot of the bad news for Europe is known. Remember what happens. They they avoid a combination of good luck and preparation.
The weather.
Avoided a winter cycle, a winter crisis. The markets love it. They rally January, February into March. Then it looks like the Eurozone economy hit a wall. And weak economic data March, a little bit into April, and my guess is that we're going to see some better numbers here in the spring. And so I think that the news cycle, I think, begins also helping the euro, weighs on the dollar.
Okay, so if you think yields are peaking here, Mark, perhaps we're approaching some type of high here in U.S. dollar yen.
Yeah, when it comes to dollar yen, I know people talk about being a safe haven and that, and I don't see that. I just think that the yen is often used as a funding currency because unlike retail, on the retail side, when I'm thinking about my own money, I'm thinking, what can I buy that's going to go up? Or what can I sell that's going to go down? But I think the way institutional money thinks about it is they're not going to use their own money. If they're going to buy something, they're going to borrow money to buy something else. What do? They borrow the yen, they buy some high yielding or high volatile asset. And when that asset goes south, which it invariably does, they buy back the yen, and voila, safe haven narrative. But I really see the dollar yen driven by interest rates. And so my target was this 139.50, 140 area. We got above it in very thin trading in the US yesterday. No follow through in Asia and Tokyo last night. And I think that I think that if this doesn't hold, I think we got to almost 140.30. If that doesn't hold, my next level is 142.50. But I'm thinking this is going to hold in this general area, lower interest rates. The Bank of Japan is still reluctant to change policy. It's not just Governor Kuroda who is like insisting on a steady policy. The new Bank of Japan team has also been reluctant to change policy, but the market's still betting that there's going to be a change in June or July, a tweak of policy, weakness of the yen, the higher underlying inflation measures, strength of the Japanese economy, all favor some kind of action in the next couple of months from the BOJ. So my sense here is the dollar yen is near a top. If this 140.30 area holds or so, I think we work our way back down. If it doesn't hold, next key level about 142.50.
Okay, interesting. I know that currencies are your bailiwick. You looking at any outside markets besides currencies, and do you pay attention to silver? I mean, it's the color of our hair. Do you pay attention to it, buddy?
A little bit. I feel gold a bit closer. I think that with the central banks buying gold, though, I would point out that the IMF's measure of central bank gold purchases aren't quite as optimistic as the World Gold Council, the industry association. But here, I think if you tell me the direction of the dollar and the direction of U.S. interest rates, I'll have a good guess at what's going to happen to gold. I saw us go through that 1950 area. It has found support. I think the dollar pullback, softer yields can help us recline back up towards that 1980, 2000 level.
Yeah, 2000 looks pretty key.
But one currency though that I see you don't have listed there that I sort of like, it's really been one of my favorites this year, but it's been squeezed lately, is the Mexican peso. Imagine this. They pay 11.25% overnight rates. They're on hold now. And it's still what an incredible pickup. Plus, the Mexican peso is, if not the strongest emerging market currency this year, it's the second most. We had as you see, you've got the chart up here.
Which
now.
Is the real? What's the strongest one? It's not the
peso,
real, is it?
No, it's been sort of back and forth between Mexico and and Hungary, which also has very high interest rates. But I like the Mexico story. A lot of the big investment themes, the narratives, all like come together in Mexico. You've got the high yield, and for carry trades, you need low volatile currency, and the Mexican peso is among the least volatile of the major emerging market currencies. So high yield, relatively low vol, and it's a 24-hour-a-day currency. The only emerging market currency has 24 hours a day. Plus, you have the nearshoring, onshoring theme of the sort of this era now, I guess, post-Russian invasion of Ukraine. And Mexico benefits from that, and that's seen through two channels: direct investment, companies building new factories in Mexico, and it's seen through the equity market, which is one of the strongest equity markets among emerging markets this year. I think it's up about 14% or so. On top of that, what we're going to get is in Mexico, it's an amazing story. Even though they have a trade deficit, that was reported yesterday, Mexican workers working outside of Mexico, like in the United States, send money home to Mexico every month. And we're not just talking about $100, $200. It accumulates to something like $4 to $5 billion a month, which more than that is to say, more than covers its trade deficit. So Mexico is a great story. It's had a nice setback here, partly on the rate decision, partly on some risk off, partly on some local politics stuff about whether Citibank's going to sell its branch network or what. Bottom line here, Mexican peso is weakened, and this, I think, is a new buying opportunity for the peso. Given its high interest rates, it's very expensive to short.
If you were, say in your 20s or 30s, and you just heard a guy, like you, just say that about Mexico, would you move there?
Nope, I think that's the real problem. I think you hit the nail on the head here. I like our civil liberties in the United States. I like my freedoms in the U.S. I like my mobility. I like the English language, the only language I can operate in. And so I think that, of course, I think that your point is also very much, I think, to China. People say, well, if you like China, why don't you move there? It's not like I like China. It's just that I don't think China necessarily is the devil incarnate the way our U.S. media often makes it seem. And so I do worry that we act as provocateurs often towards China. But I wouldn't want to live in China. I need my civil liberties. China still is an authoritarian, if not totalitarian regime. So we can like the currencies, we can like investments, but no thanks. I'd like to stay here in the States.
Right. It's all about being content. And Mark, you talk about China, and, I agree. Right now, we're making a big deal out of them banning micron chips. But most Americans don't know that we already have, trade restrictions on them to get no chips. So it's not like they're the aggressor. They're just retaliating to what our actions were.
Yeah, we have seen. So for me, a lot of people say, well, China manipulates its currency, and it does. It's highly managed currency. Exactly how they do it is just beyond me. I think that they change. It's almost like one of those Star Trek shows where they fight the Borg and they have to keep changing their defenses randomly. And I think that China changes how it manipulates, how it manages the RMB. But it seems to me that if I want to as a market participant, I don't really care so much how they do it. What I'm mostly interested in what they're doing, and I sort of see the Chinese tracking the euro and yen. So if you tell me which way euro and yen are moving, I can have a good idea which way the dollar is going to move against China. And it's not coincidental that this week dollar yen made a new high. Dollar yen made a new high for the year, and so did the dollar against the RMB. And I think that when the dollar yen and the euro find some support, I think the RMB can recover as well. You've got a big policy divergence. We talk about our inflation coming down. China's CPI year over year 0.3%. If we could take Chinese data at face value. Bond yields, the U.S. offers almost 100 basis points more than China. So I think there's good reasons to be doubtful of to understand this Chinese currency weakness recently. But I think it's largely not China doing it. I think China's just tracking the euro and yen. And I think that when the dollar sets back, we'll see the RMB recover as well.
Okay, Mark. Last thoughts going into the Memorial Day 3-day weekend?
Now, remember, Monday's a holiday in the UK as well, so there's no real liquidity outside of Asia come Monday. Big focus next week, I think, is going to be on the US data, the jobs data, of course, the debt ceiling. But like I say, we should expect some more drama. President Biden said he wasn't going to talk and negotiate about the debt ceiling. And that was part of the negotiations. Saying you won't negotiate is part of how you negotiate. And just because they begin talking, it doesn't mean the drama ends. It means that the drama there's another act. And I think that we still have a little bit of time. And so there'll be a little bit more drama, I suspect, in the early part of next week. The only thing I really would end it with is just to remember that trends are your friend until they stab you in the back.
Spoken from a guy who spent some time on the floor.
Exactly.
All right, Mark Chandler, great to talk to you. You could follow Mark at Mark Making Sense with an S, and your website address for people to go there, Mark.
Mark to Market comes from the first book I wrote, Making Sense of the Dollar. And so Mark to Market. Every day, my employers let me post a commentary up there. And I appreciate your help on ForexAnalytix, posting the commentary too. It doesn't have to be read on my site. I just want to participate in the broader discussions. So I appreciate your support.
And Mark, we're fans. We root for you, and thank you for bringing some clarity and making me feel foolish for getting caught up in the debt limit debate and making predictions about what's going to happen. Anyway, always a pleasure, Mark. Thank you so much, buddy.
Good luck to everybody.
Yeah, have a great summer's coming up. We're a month away. Rooting for you and everyone your words touch. Happy Memorial Day. To everyone out there, and especially to the families of the fallen, there is no greater love than one laying down their life for another. So whatever your politics are, you have to be for the troops. So happy Memorial Day, Mark.
Well, good luck to everybody. Thank you.
All right, that's a wrap, everyone. We laid it on the court for you. Hope you guys had a good week. We added value. You have 3 days to think about what your next step is as a trader as we get ready for the summer trading season. You know what I think the step you should take if you haven't already, so I won't even say it. Have a great holiday, everyone. And don't just count your pips, count your blessings. And we'll be here Tuesday. Enjoy your long weekend. Thank you.